live Trading Week Ahead broadcast. I'm Ken Calhoun. As always, all information is for educational use only. Let us get underway. And be sure to attend the Money Show events if you get a chance. They're really good. Thanks one and all for making this one of the more popular events in the world. 5,700, almost 5,720 folks registered for these things. So let's take a look at our broad market. We've got a 2-candle red drop here. Almost but not quite a shooting star, but at least bearish upper shadow there and a bearish engulfment there. So for that reason, if we lose support under the, say, the 2970 or so, we may see continued selling. Immediate S1 isn't until this 50 SMA at the 2950. R1's up at 3030, right? So market's been doing an inexplicable rally up the last couple of weeks. That's starting to show signs of weakness as the market's starting to roll over and crash and burn. I'm curious, how many of you are also trading instruments like TVIX or SQQs or whatever are inverse instruments on this sell-off? Show of hands, or just a shout out, or type the letter Y if you still need your cup of coffee this morning. How many of you are playing the market to the short side like I am by trading some of the inverse ETFs to go up when the stock market crashes, or at least are thinking about it maybe next week if the market continues to sell off? Hit me up with a Y, the letter Y. Let me see. Well, a lot of you. Thank Fame and Cash, BW, Deanna, Phil, Oksana, Mira, Bruce. Starting to see the Y's light up the screen there. And yeah, it makes sense. The TVIX took out its 52-week low a couple days ago. I didn't get shaken out by that because I know that that's how this instrument operates. It's classically, any of the VIX ETNs, they'll lose support to wash out the weak hands and immediately run right back up again. So I've learned the hard way not to get shaken out. So I didn't, and in fact, I added shares. I normally don't add to things as slightly underwater as it was. After all these red days, I started adding to my position. So I'm currently 500 shares deep in TVIX and a total of around $12,000 worth of this and UVXY and VXX and SOXS and SPXS and SQQQ and all the rest of it. But we've got really good directional volatility in the markets. From a long standpoint, that's one set of instruments. The other is to keep an eye on gold. Gold had gone up for quite a while. When the market rallied, gold dropped. This is Nugget, NUGT. But Nugget's been on the mend the whole last week. One quick strategic tip that I want you to stay well aware of. Any market professional, any of my institutional Wall Street clients, anybody I've worked with that's a market maker, specialist, shout out to all of you guys. You know how good my alerts have been in my Wall Street squawk box approach in my live room. Look for lead indicators and correlations between known variables. Things like, when the stock market goes up, gold goes down. When the stock market goes down, gold goes up, usually. We've got commodity volatility, and oil especially is a really great play to keep an eye on. Things like UWT. I'm long both. I'm doing arbitrage trading. I'm long both UWT and DWT currently. They're still trying to find their way, but from an oil standpoint, those are instruments worth trading. When you're looking for good directional plays, whether you're trading small caps, here's Pier 1. I had bought, and I told you guys I was going to buy at 522, and I sold 9 something on this day, and that's it. I'm currently not in Pier 1 imports, but I did really good on that trade. And one thing that I think can help is when you're looking for trade setups, look for instruments that have big trading ranges, like I've always said, good directional volatility. And if you do trade stocks under $10, don't trade low float, thinly traded crap that's manipulated by guys that front run their members in chat rooms and all that kind of stuff. That's a big danger, no. Only trade instruments that trade at least 1 million shares a day, right, for swing trades. Or intraday trading, at least that works out to around, maybe, I'm not sure the exact math, but My minimum threshold for what I personally day trade is I look for charts with at least 15 15000 ZZZ for my friends in the UK, 15,000 shares per minute, and that helps safeguard you against those unscrupulous front-running morons that run these momentum moron chat rooms where they're trying to trade low float crappy penny stocks that pop and drop and blow up everyone's trading account even faster if they're trying to do it from a Bahamas-based broker. I've been telling you guys for years, don't ever open up an account in the Bahamas. That's a stupid thing. And I was right. One of the big brokerages there was recently suspended by their version of the SEC. And good luck to anybody who's got an account there. They may lose all their money, right? The broker may go out of business or abscond with the money of the folks, or at least have them cause a lot of stop loss and because they can't get to their account on Monday when the market crashes or whatever. So anyway, use a reputable American broker like Interactive Brokers, Fidelity, or Ameritrade. Those are my 3 top picks. And I've got accounts with all 3 of those, so do what I do if you want to be smart. Anyway, directional volatility was good in Pier 1 imports. I don't like the fact that the whole real bodies of the candles are getting flatter, but we do have an ascending triangle. So this guy, again, not a trade recommendation, but a technical trading pattern. It might be worth a shot if it's able to take out the nearest whole number resistance over 11. But that's when I had successfully, profitably traded here from, I bought 522, sold, I think it was 918 or something, or 933, something like that up here. So I'd correctly traded just for a 2-day round trip. I'm sidelined now. If it does take out new highs, it may make sense to take a shot at. Another interesting chart that my small cap scans members got earlier was GOGO. GOGO. Probably a joke in there somewhere, but anyway, it went. It's a GOGO. We got a bullish cut pattern, breakout above prior resistance, ran from that whole number 5 resistance trigger all the way up to 7. So from 5 to 7, big profit opportunity if you traded this. If you do trade cheap stocks, make sure they have good directional consistency. You know, traders ask me all the time how to become more consistent in their trades. And my answer is trade consistent charts that have good directional moves that are sustainable, particularly for stocks under $10 a share. So there's a lot of crap, junky up and down under $10 stuff out there, which is most of them. I spend a lot of time researching charts for my members to pick out ones like these that actually make sense. Here's another pick for my members they got earlier. Hovnanian HOV. This is a really good base of 5 and it tripled to 15. It's been quiet with kind of flat, non-directional candles lately. I guess Wednesday, Thursday, Friday, a little uptick here. We'll see if it breaks the whole number 17. And this also is a ascending triangle. And by the way, I don't know if you folks have found this too, the gaps have been largely inconsistent this last maybe 4 months, right? We've had a lot, especially in the cheap stocks, like the cheap biotechs that gap up and run up pre-market and then they just chop and drop in market. We don't have gap runners nearly as often the last several months as we historically have the last 20 years. The one pattern, the chart pattern that I found is much more consistent is ascending triangles like this, right? Because that's a story of buyers slowly winning the battle. The tug of war, the battle between buyers and sellers. Who's going to win? Well, if you want to win as a trader, you got to figure out which charts are most likely to give you an edge or which charts have directional volatility that makes sense. Well, big turnout today. Hey, good to hear it. Trader saying they did good on GDX. You're right, Mukesh. Thanks. Yeah, a lot of folks here. Anyway, so when we're taking a look at directional plays in the market, make sure that you're looking for volume, volatility, and consistency. Okay, those are 3 things to look for. Especially important in up and down markets or markets that are undecided or can be thrown up or down based on any headline or Trump tweet or whatever. It's important to take a look at what institutional traders are doing as evidenced by increase of volume that's bigger than the normal trading volume. So what I want you to look for is something like this, where you've got an uptick in volume day after day. This gave you a 3 increasing volume trigger, which would have been easy to play up over 9 or over 10 or over 11. But this was kind of like the first clue. Volume here, second there, third there, a fourth and a fifth, and that was the climax volume. That's another quick tip, by the way. And I haven't covered this before, so congratulations on being here. If you see an increase of 5 or more increasing volume days, tighten up a trailing stop, because often after price has gone up in a row, 4, 5, 6 days, and volume has been increasing, often that's going to drop or go sideways. Not necessarily do a big pullback, but you can see the volume dropped here off the peak. The second tip on how to trade that intelligently, with a great degree of professionalism and accuracy, potentially, is to make sure that when the volume drops, like where I'm pointing, does everybody see where the volume dropped? When volume drops after a escalation, kind of like an escalator going up, right? You can see the previous days, volume and price both went up. As soon as volume drops back and price goes steady, you can sell it, right? That's what I often do. I'll just go to cash because I want to cha-ching. I want to take the money and run. Bing. So if I make a winning trade, if I see volume start to pull back, then I will tighten up a trailing stop. I'll often sell half just to take profit of the shares and then put a trailing stop that's within 50 cents or a dollar at the most for the higher priced instruments. For these cheapies, usually 30 to 50 cents under the day's low. So volumetric analysis. Look for an increase in volume of at least 2 or 3 days in a row of an increase in volume accompanied by a corresponding increase in price. Go long, say 50 cents above the high of the most recent day. And then once volume starts to fade back down again, it's kind of like hit and run trading. You're looking, again, this is for like a 1 week swing trade or a 3 or 4 day swing trade. So that's a good entry and exit strategy that I encourage you to use. You have to use volume a lot more than normal in a highly volatile, sensitive market. Now, sector-wise, normally we cover sector analysis in addition to our equity charts. It looks like pharmas are trying to come back to life. But the VIX is up near 10%, right? So that's a pretty big bullish engulfing in the VIX. Now, the technical signal that the institutional traders will use in the VIX is to make sure it gets above the 1660 200 SMA. So I'm kind of jumping the gun, putting on my trade early, because after all this redness, we finally see some shorts covering and a little bit of green there. The price that proves this wrong would be a loss of support. But anyway, the institutional signal is always a 200 simple moving average line, not an EMA. I always get that question. Traders say, why not the EMA, derp? Because professional traders don't friggin' use it. Professional traders use simple moving averages. We use the 200 SMA. Live and die by the 200 SMA. Start to use the 50 and the 100 as kind of initial entry signals and trade management decision support tools, but your 200 SMA is a critical support resistance line that every big Wall Street firm uses. We all do that, right, for decades. So that's not going to change. So the thing is, abandon all hope, ye enter here in long equities if our VIX breaks over that 16.5, right? If we get over, say, 1660, 17, watch out below, right? So that's the 200 SMA there. When the VIX is up this sharply, and of course gold is not far behind, also up lately, it recovered its moving average line. That's the first sign of a potential bear market. But given that this is a tweet-driven, headline-driven market that's very sensitive to the slightest up or down, it's like, you get a Trump tweet about, hey, I talked with the premier from China and we're back on track. This tweet that I don't want to see occur over this weekend, like happened a few weeks ago, that took us out of the August consolidation. The actions speak louder than words, and the fact that the delegation from China just up and left abruptly kind of sends a clear message to the markets and everyone that the trade war, and then Trump said he's not eager to solve the trade war till after the elections. And we've got economic headwinds and uncertainty, not only from the Fed with just a 25 basis point cut recently, but recessionary indications from banks in Europe and everywhere else. I'm not bullish the market. I'm a bear. I'm a big bad bear. and I want to nail the market like I've been doing. So anyway, make sure that you're on the right side of things and using volume to confirm entries. I'm not going to do any sector analysis other than the fact that what I just did with the VIX and gold. Always look for where the most green is, right? Where's the most green on the screen? And where's the most red? If they're selling semiconductors yesterday, which they were to the tune of 2%, our Philly Semiconductor took a dump. We had 2 red candles coming off of resistance, another 2 red candles taking a dump. Next support is down here. That's why I play, and I'm long right now, SOXS, right? Our semiconductor short, which is up 6.5 percentage points yesterday. I've only got a couple of minutes left here. But anyway, have a sensible game plan for your trading that makes sense based on not only volume but price action, and figure out, just by looking at the charts. I mean, I do it for my members every single day, both in the live Trading the Open live room, which you all should join, as well as swing scans for my swing scans members, which we're going to be meeting in about 12 minutes. So you got another quick chart tip. Before we do, just a quick reminder, I do have a special on my live room, a 2-week trial. If at no other time in your life you join the room, do it this week. It's 2 weeks, non-recurring, just $47. Even if you've already done a trial, I'm saying it's okay to do it again. Normally I just say 1 trial per person or whatever. But if you have not yet joined, do be sure to join. It's only $47 and you get over 15 hours of training with me. We meet every single morning from like 8:45 to 10:30, 10:45. Our regular hours are 9 to 10:30. But I'm always early and I'm always stay late. So anyway, you get 15 hours of live market training. The reason that that's valuable is because you'll see specific entry triggers in both stocks and ETFs every single day before the opening bell of what's worth trading, specific entry triggers, and also live in markets. I walk you through using tape reading and specific 1-minute candlestick patterns exactly how to trade intelligently. So if you've been burned by those wannabe young guys who are trying to teach you guys the wrong way of trading pop and drop, cheap, thinly traded, low float, crappy POS under $10 stocks using a Bahamas broker, epic fail, learn from me instead. I've been doing this for 20 years, since those guys were in kindergarten. So I'm old school, but I'm the good school. I am Day Trading University. Join me at tradingtheopen.com. Bum, 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 bum. But seriously, what's next for the market? If we get an epic sell-off, what are you going to do? Just sit on the sidelines and miss out on profits? If we get a continuation rally, what are you going to do? I'm not going to chase it. I think if the market takes out any new highs, and the commentators on CNBC often have really good technical points too, I am skeptical about a breakout. I expect if we do recover and run back up, it's likely, as it has every other time this year we've had, it's a breakout, oops, fake out, breakout, fake out, breakout, big epic fake out, breakout, fake out, breakout, fake out, breakout, fake out, boom. I'd love to see the market under this 2830, 200 SMA by year's end. We'll see what the trade war concern does to the markets next week. Hopefully we'll get a big gap down in the market come Monday and a continuation run down, which means that my TVIX and all my other inverse instruments I'm in will be starting to go up. So good trades to set up here. Hey Phil, no, I haven't heard about the silver busted Goldie for, but yeah, there's a lot of stuff going on out there. Hey, thanks, Brian. Appreciate that, man. Yeah, looking forward to my 5 o'clock presentation with Metastock as well. I've worked with Jeff Gibby for years. He's a really nice guy, really smart too. They've got, you might want to sign in after this to their all day long shindig. They've got the Metastock online summit is today. So, and I will be speaking today at 5 on that. Good to hear, Brian. You're watching something now. Splitting your attention. That's good. I'm like that too. Anyway, let's go ahead and wrap up for the day. I wanted to thank everyone for being here We'll be getting underway with our swing scans broadcast in just around 8 minutes. And do give me a shot. If you found value in what I teach here, it's only $47 for 2 weeks, which it works out to over 15 hours of training with me for only $47. And it's a non-recurring one-time thing. And I don't know how long I'll keep that special on for, but it won't be all year or anything. So do join me at www.tradingtheopen.com. If you're a day trader, if you're a swing trader, go to www.swingscans.com. And that gives you coverage on better charts than the ones I cover, much better charts than the ones I cover here for all the swing traders in the world. But all eyes on our inverses. Let's do a last quick technical activity. I know I'm over time here, but a quick tip is, and a good pro trading tip is, always sort your quote box by percent change. And I have my software calculate percent change from open, not the close. That's why my numbers may be different than yours. You should always have your portfolios set to calculate the price as change from open, because that gives you, the great thing about that is at 9:30, our watch list, everything is at 0. And that way, once things start to move, and you sort the quote box by percent change, the most green ones that are starting to merge with new breakouts pop up really easy to see for everyone in my live room. So anyway, UVXY, big bullish engulfing candle. I'd feel happier if the volume were over 25 mil, but it's a start. JNUG starting to bounce. We looked at SOX's SQQQ starting to bounce. SPXS starting to bounce. Bullish, a hammer plus a bullish engulfing. So SPXS looks good. You get all these inverse instruments and plenty of opportunities. TZA versus TNA have been really good lately as well for volatility. But I'm a big fan of our VIX ETNs like TVIX, which I'm 500 shares long in. Hopefully that doesn't gap against me Monday. But I made a correct decision, or I should say, I made a decision following my rules. A recovery of the 52-week low, a bullish engulfing pattern on the tail of negative news after a unfathomable, nobody knows why the market ran up the last couple of weeks. There's probably not any really good news for the reason for that. But the market is very susceptible to any negative headline or China trade war fears or the rest of it. So I want to capitalize on it with this type of instrument. So anyway, join me at Trading the Open, and we cover this and other instruments daily for our members around the world. We got such a big influx. I'm a record high new subscribers in my live room as of this past week, because people are fed up with the Bahamas brokerage advocating pop and drop, cheap $3 stock, blows up people's accounts, front running, manipulated, phony young guys out there that are all over social media. It's all a big S show. I won't use the S word, but it's all a big cluster. I won't use the F word there either. Anyway, look for validity, look for honesty, look for authenticity, look for price action in instruments that are most likely to make you money. And which of the charts are the most consistent. If you do trade cheap charts, I prefer, by the way, I swing trade. So I do trade stocks under $10, but I swing trade them. I don't day trade stocks under $10 for the most part, because that usually gets me in trouble. And I've found it's better to swing trade the inexpensive instruments that are part of an ascending triangle or an acceleration ramp or a gap continuation or bullish cup breakout or whatever you're looking for. But look for consistency in your charts with an increase in volume to help you stay out of trouble, hopefully, and on the right side of things. So anyway, thanks for being here. I hope to see you guys next week. Join me in my live room if you want. And if not, I still wish you the very best. I'm in the process of solving my arbitrage ETF puzzle. So once I do that, you won't see me anymore, ever. So anyway, thanks for being here, and I will see you guys next time. Yeah, Brian was saying he loved TVIX when it was at 4 a share. I didn't day trade it back then when it was down at 4, 5, 6 a share, because it didn't have enough range. When they did the, I want to say It was either a 10 or 20 to 1 reverse. They've done like 14 reverse splits. Then it became more interesting. Back when TVIX was down at 5.6 a share, I was trading VXX, was the main VIX ETN I traded, and secondary UVXY. Now I like TVIX best, and I'd say VXX second best, and then UVXY third best. But they're all worth a shot. They're all good stuff. So anyways, we'll see where things head.